This is going to be a special video regarding the recent OPEC Plus announcement on Saturday, July 5th, 2025. So, the official announcement is in, and OPEC Plus will be adding an additional 548,000 barrels per day to global supply. This announcement exceeds the prior addition of 411,000 barrels per day and is in line with the market expectations of an outsized add. However, was this add bigger than anticipated? Well, that all depends on how you're going to view it. OPEC Plus is now on track to roll back the 2023 voluntary supply cuts of 2.2 million barrels per day a year ahead of schedule. Inventories are low, refining margins are relatively strong. U.S. refiners are processing the most crude for this time of year since 2019. For some more color, within the month of June, Kazakhstan crude output surged 7.5% to 1.88 million barrels per day, which is well above their official quota of 1.5 million barrels per day. This did match its all-time high production-wise, which was largely driven by Chevron's expansion of the Tengiz megafield, which by itself added an additional 140,000 barrels per day month over month. Kazakhstan's total oil and condensate production hit 2.15 million barrels per day in June, up from 2.02 million barrels per day in May. Kazakhstan officials have repeatedly pledged in the past to remain OPEC Plus compliant. However, they have stated that they cannot enforce production cuts on foreign-led projects like those found in Tengiz or Kashagan. The energy minister, Yerlan Agzanov, said in May the Republic has no right to enforce production cuts. Chevron has also stated that they don't engage in discussions about OPEC or OPEC Plus. For all intents and purposes, OPEC Plus have officially ripped the Band-Aid off. They're getting the cuts rolled back in an effort to regain control of the market on the supply side. In essence, you could say that it's better to get it over with and move on when it comes to production increases. So to recap before we get into the technicals, this does signal a major pivot from a price defense standpoint to a volume maximization standpoint when it comes to OPEC Plus and oil share. So that's a brief little synopsis on a fundamental view of what is going on. Now let's get into some technicals. If you look at the weekly and you see where we were, reality, we're having an inside week compared to where we were the prior week. We went over this all in Commodity Corner. Oil's been a little bit more of a snooze fest. Volatility has gone out. But the question becomes now, where do we really go from here? So if you take everything that was just said on the fundamental side and you bring it forward, then with the increased production and with the cuts being rolled back much faster than anticipated, a full year ahead of schedule, you're probably looking at oil somewhere living, again, in that $50 to $60 range is where it ultimately goes. How it gets there becomes a little bit more of a challenge. I would venture to say we may live this week in the $60 to $65 range. We may get there. There's a lot of congestion over here recently, so we may live there. Let's just switch quickly to a daily just for a little bit more granular perspective. The problem that we have is that oil, for all intents and purposes, is really, really going nowhere. We were living in a, let's just say, $68 to $70 range for most of the back end of 24. We broke through it, and we did get into the fives. However, there really is no rush to move oil prices around. That's really what happens a lot of times with some of these commodities. They just find a home and they just live there and they'll just chop around. Is the 548,000 barrels enough to get the market moving on the downside? It might. However, one of the cases I laid out was a little bit more on the bullish side, inventories being low and refining margins are strong. The problem that you have, and this is the way I view it, is that with all of this bullish fundamental picture, prices aren't going up. So whether it be in gasoline, whether it be in crude, they're not going up. So that alone is telling you that there is a push-pull between fundamental data as well as technical data. The way I view it personally is that price right now is truth. There is something to be said about when you line up your fundamental picture with your technicals, and then you can hit almost home run trades, even grand slams. In this particular case, they're not in line. Fundamentals are going one way, technicals are going another way. You have some bearish fundamentals, you have some bearish technicals, you have some bullish technicals, you have some bullish fundamentals. So there's a lot of push-pull going on. Is there going to be a gap down? I don't know on Sunday night, which is going to be in about 3 hours or so. I don't know. And the truth of the matter is it doesn't matter. And the reason why it doesn't matter more than anything else is because the market's going to go where the market's going to go. I have my thesis. My thesis says $50 to $60 is where we're going to live. We may live in the 50 to 60 doesn't mean 51, 52. It could be 55, $60. It could be living there as well. I think that's where we're ultimately going, whether it happens now or happens 2 weeks from now or it happens in 3 months from now. That's ultimately where I think we're going. Now, I will tell you, don't go into 6 o'clock tonight with short on the brain. Don't go in with that. Don't just think, okay, I'm just going to short it at 6 o'clock and I'm going to make $1 gazillion. Everything's going to be awesome. You don't know where things are going to go because the market was expecting an outsized move from a production standpoint. We got it. Now the question is this mega outsized or is this somewhat in line with where we're going to go? So people are going to be watching inventories very closely moving forward to see how this plays out. So I just wanted to give a quick synopsis specifically to oil. I wish you the best of luck. Have a great week, and I'll see you next time.